Well, good morning, everybody. Welcome to Stockradar. Stocks in the move for another week. Today's date is the 6th of February 2025. Sorry, last week I got the date. I was a week out, but I got it right this week, I think. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, yes, emotion sitting on your hands can be a real game changer. Patience we need to learn about. So yes, sometimes doing nothing is the way to go, but for some reason when markets jump, like they have been doing, we get that anxiety that makes us feel like we should be doing something. Perhaps not. I'm going to have a look at that in trading tactics a bit later on. But first, we want to go to our trend intensity rankings for this week. Okay. Aristocrat at the top, LQ's up there making a break higher. Ansell's been a wonderful mover for us. You know, broke early 24 right down here around $24. It's now around 34. It's moved through a major high here, which has been a good endorsement of the strength. Still rating a 10 and moving higher steadily, and not been too concerned about market ructions elsewhere. Brown's doing well, Capricorn's doing well, computer share keeps making new highs, and of course the gold stocks have got that double whammy at the moment. Which doesn't happen all that often, but you know it's driving these stocks, EVN, Gold Road, and of course there's GMD, another small miner there as well. We'll have a look at RRL a bit later on. Okay, so that's your top 10 trend intensity rankings. We've got plenty of them this week. That's not the definitive thing. There's lots of trends that we've got. We have lots of new entries which we've got. So it's quite exciting times for us at the moment. Our stock pick count is up 5 this week, so we've got 4 new stocks and 1 new ETF in this week. So we're up to 60 stock picks of 184. So we have 46 stock picks of 158 stocks, 14 ETFs of 26 ETFs. And that's the lay of the land for us at the moment. Okay, let's get into some overseas markets and have a look at these things. Not a lot. I mean, we've had the barb thrown by Trump with the tariffs, and we've seen the market go up and down, but really not much has happened here. The Dow is back on its highs, and nothing's really concerned, and volume's been great. So not a lot to concern ourselves with there. The Nasdaq is a similar, testing its highs again, back up again, a little bout of selling, nothing too big. The S&P the same. So really with the indices, you don't really want to read too much into what's been happening. The trend is up with these things, and I don't know how far it's going to go. It's gone a lot further than we would have thought. It may go still a lot further, I don't know. But for the moment, we're still seeing this underlying resilience of the market. When it pulls back, the buyers are banging straight back in there. So that's good for the indices overseas. Looking at our market, it's also doing very well. We had a wipeout earlier on in the week, but we've recovered a little bit. We are in that uptrend of new highs, high highs, high lows, nothing really to worry about. I don't see any problems there on the chart at the moment, price-wise. Okay, gold futures, they just keep banging higher and higher with a little correction here, but they're moving higher again, which is great for us. We're seeing some great volume there, and momentum starting to tick into the green territory again. So, you know, it's been a very good run, this gold run. Copper has really done nothing. It had a bit of a bounce this week, but doesn't really tell us a lot as far as we know. You know, it's still trying to climb that wall of worry here and break out up here. We'll have to wait until next year or something for that to happen. Brent crude, it's also, you know, it's just sitting in the same spot. It's in the downtrend and support is holding. So we're really not getting anything there and haven't for quite a while. But the pressure remains down. There's some pretty big volume here at the moment, which pushed the stock, pushed Brent crude higher there. But the sellers have come back in and wiped it out again. So really not a lot of change there. Pressure remains down for crude. So can't be much more negative about that one. Unfortunately, it's the way it is. Okay, so now I want to get to some stock picks. What our aim is trying to find the right stocks for you. So I'll give you an example of some of the trends that we've captured, why we've captured them, how we maximise our potential. But every week there are new stock picks coming up that we jump in on. There's a really nice one that came in last week from the health sector, which has kicked a higher. But some of these stocks I'm going to show you today are really what we've seen do, and there's a possibility here. So first off, I'm going to start with New Hope. The reason is I think, you know, in the coal sector, we've seen some doldrums there. We saw that huge rally a couple of years ago. It's gone into a bit of an I don't know stage. Coal is still an item, a big item, and we look at stocks like Whitehaven and Stanmore and also Northern New Hope. They've all come back to a fairly important support level, and they're holding, but they're not rallying at the moment. A bit like what you see here in New Hope. It's holding but not rallying. So it's you know, you can see the clear resistance level here. which is holding prices down. So I really just wait for those sorts of things to break. If it breaks, well and good, I run with it. If it doesn't break and we send it run down, then I'm just not involved in it. So I just wait for the time to hit the market, and with New Hope, that's just above about 5.15, I think, at the moment. But as I said before, we've got Whitehaven and Stanmore also at big support levels, had big corrections, and even Yancoal now starting to recover a little bit, and a little bit of hope there. So I like that one there. Okay, onto the retail sector, which is really the consumer discretionary sector, and we see these stocks here, and they really are, stocks like JB Hi-Fi, Yield Engine. Well, Yield Engine was, but it's come down a little bit, probably to 3.5 or something like that now, because the price has gone up so much. We have been more than compensated by the growth here for sacrifice of yield. So JB Hi-Fi is nudging above 100. It's 102 yesterday, still looking good. No problem there. Why would you sell it? I don't know. So then we go and look at JB Super Retail, another big engine there, but it's yielding up near 8% at the moment, and it's really has the trading action has been very unclear to me. We've seen this big rally, big pump down. Now it's just trying to grind its way higher at the moment. The only interesting thing for me really is with Super Cheap Auto, because you sort of look at a stock like this when it's corrected, where's the buying spot? Look at this big area here, big resistance. This is going back to 2020. Big resistance. Then it got through there, found support back here, it rallied higher, then we had a bit of a clunk here, and it's come back to its long-term trend line here, which looks like a fairly solid line to me. Not just the trend line, we've also got these highs and lows all rotating around this S1 area at the moment, which it has held for the moment. Now, this grind higher, to me, looks like it's working very, very hard. There's not a huge lot of volume there, and this is neutral, so I'm a little bit wary of it at the moment. But there is something in Super Cheap Auto that I would like to get into at the right time. So we might just wait and see with this one. There's no trend reversal, no new high happening, but trend intensity rating has gone to -4. So the support is showing there. So possibly a pullback to a high low might give us a trend reversal, but certainly Super Cheap Auto, as I say, as a yield engine, is certainly worth looking at on the corrections. And that big correction towards S1 between about $13 and $14 looks like a pretty interesting area there for Super Retail Group. Super Cheap Auto. It's now Super Retail Group. Okay, now the other one, which has probably frustrated us a lot for a long time, has been Harvey Norman. But if we look at the long-term chart of this one here, it's really, we've seen a big long downtrend from $6 down to just over 3 here. We've now had a wind up. We're now recovering. We had a small trend reversal here and a hit there. Now we're getting a more major look at a trend reversal here with a whole lot of high lows here and a big resistance here. Whatever you want to call it, you can see the buyers are stronger and the sellers are just sitting there. So we're chipping away at this area this week. Whether we close above it or not, I don't know. Trend intensity rating is +3. It's in its right spot for us to look at Harvey Norman. It does yield quite well. If I'm looking at it closely, this stock, look at this rally here. We're seeing a little bit of life come into the market just here. A little bit of volume appears in these rallies here, which is quite good. Not huge, but it's better. And momentum is also starting to tick up. So we're starting to get some pretty positive signs here, finally, from Harvey Norman. Love him or hate him, it's up to you, but he's certainly very controversial. But I try and put all those things aside and look at the reality of what I'm looking at, which is price, trend, volume, moving average, and MACD, and that's telling me this stock is looking like it wants to go higher. I just need confirmation from price of a move of about 5.15. So that's just an interesting pocket of strength. Some of those consumer discretionary stocks. We talk about Aristocrat. There's lots of them in there. So Harvey Norman may join the party soon. Certainly worth a look at. Certainly worth watching. IAG, well, again, like JB Hi-Fi, we get these stocks every now and then. They come along, and they do come along all the time, and they just keep going and going and going. And IAG is just kicking above its high, all-time high, record high. It was doom and gloom down here. Now all of a sudden we're at this higher high and higher low, big trend, which is now pushing to all-time highs. Who knows where it's going to go? I don't know. All I do is manage it with my stop loss to protect my profit at the moment, and maybe extend it a bit further if we can get a bit more galloping out of this stock here. So IAG looks like a pretty good mover to me. Trend intensity rating is still 10 there, and it's looking pretty nice indeed. Along those lines, we've got QBE, another insurer, which has also done very well. Had a beautiful, nice little impulse moves for us to jump on, and it's currently having a nice little impulse move at the moment. It's hit $21 just about. It's just come back a little bit, but it looks very good. There's plenty of demand here, plenty of volume. Momentum's very good. It's above the average. So QBE again went from someone who we all used to hate, as it could never get off the ground, to somebody we love now because it's going up and up and up, and is making new all-time highs. So pretty amazing, really, when you think about it. But they've really just chipped away, and finally got through into this high territory. That's a great one, QBE. And again, these stocks, who knows where they're going to go. So they're still right trend intensity of 10. They've still got high and lows. So there's still a valid trend there to follow. Okay, then the next two I want to go through. Okay, so that was the consumer discretionary stocks, coal stocks, and also some of those insurers there. Steadfast has been struggling a bit, as it has, but IAG and QBE have been doing quite well. And in that diversified financial sector, you've also got things like MQG, which is doing really well. Suncorp's doing well. AMP starting to move really well. Even Medibank Private, just the last couple of weeks, started to get on bike, and certainly worth looking at. It's moving along quite nicely. Firstly, I want to go to Judo, which is a new listing. This is the total history of this stock, down from its listing up around 240 down to about 80 cents or 90 cents. So not a happy start for Judo, but it's now got into it. It's developed a nice reversal pattern for us. Shoulder, head, shoulder, if you want to call it head and shoulders. This is simply a reversal pattern that's happening here. The shift is going from the sellers to the buyers. We identify the stage when the buyers are really starting to get on top. And then we run with it. So the new trend reversal point here was up here. It's now run higher. It's now got into an area now where it's found a little bit of selling here, back here, which gave it a bit of a jolt. Came back. It's come and tested the highs again. So we're in a corrective pattern at the moment. But overall, once again, we step back, take a view of the whole thing. The trend is still up. No real problem. Okay, so we can doubt and worry all the time, which is what we do, but we don't have to here at this stage. We know where our stop is. We set our stop. And we know exactly what we're going to do. So we've got a high low here, and we want a high here. That's what we're looking for now, and it hasn't happened, but we'll wait and see. But it's certainly in an uptrend Judo Capital, and it's been looking pretty good, so it may well move higher. And if it did happen to get through this area here around 230, which were the initial listing high price, would be a very strong indication that it wants to go higher. So Judo Capital is certainly one worth looking at. Another one I went through a couple of weeks ago for you, the gold stocks, we're just in that moment. Doesn't happen a lot, but we've got the Australian dollar diving and the gold price jumping higher. So we're getting these stocks. And I pointed to RRL a couple of weeks ago, a very classical stock in what it's doing, a downtrend phase, accumulation phase, and an uptrend breakout phase here. So we get a confirmed trend reversal here, and it moves higher from about 238. It's now up around 326 and looking pretty strong. So RRL has gone quite nicely. It's following a very classical pattern, which is unusual for gold stock, but it didn't really respond initially to the gold price rise, but it has recently. It's obviously got some ducks in order there to make sure it can capitalise on this gold price. We're getting great volume through here. The momentum's great. It's above the average. The trend is high highs, high lows. 10-10 rating is 10. All things are flashing green. It's in an uptrend phase. You simply raise your stop, and that's what you do. So that's RRL. So there's a few stocks for you today. The market's full of opportunities at the moment, all through Trading Centre. I've got lots of these stocks in here, lots of diversified finance stocks. There's quite a few metals and mining stocks. There's lots of stocks for you to have a look at. Some are coming in, some are moving out. Some are extending their trends, but there's something for everybody in there if you go along to the Trading Centre and have a good look at that. New trends are emerging all the time. You have to get in early to catch these trends, so check the Trading Centre weekly for new stock picks. Okay, now I want to go through my slides, just a bit of a rundown trading tactics, my pearls of wisdom after being in this stock market game for many years. You sort of learn certain things, and I think people like Warren Buffett learn certain things at the ripe old age of 93 or whatever he is. And there are things you just know after a while. And in trading tactics, I talked about today, emotions can make us drive nuts, but it's patience that we need to have. So when the interesting thing is, when market falls, we fear markets when they fall badly, yet we always worry when markets are rising. So I'm not too sure how we get positive in this world. So you've really got to shift your thinking a little bit as to how you're looking at the market and what they're doing. So we fear market falls, yet worry when it rises. So sometimes it's just best to do nothing. You have your signals, you have your trade plan, and sometimes we feel the stock's gone down. nowhere near my stop, but gee whiz, should I be doing something? Should I be chopping out today? Whatever. Follow your trade plan and do what you think's right. Market uncertainties create an anxiety emotion that makes us feel like we should be doing something, or the world might fall apart. Well, can I tell you, it won't fall apart. It's fine. Trading tactics. The right thing is to do nothing most of the time. So at the end of the week, I get through my 158 stocks and I might do things with about 30 of them. And a lot of them I don't touch them. So, most of the time you do nothing. Yes, we should respond to our trade plan, to our stops. That's exactly what you should be doing and nothing else. But you do that on Friday when the week is closed and settled. So I go through that week and you can just worry if you like about things going up and down. But generally you'll find in most instances, most stocks that go outside the band will come back in by the end of the week. And those that don't have broken down or have broken up, and they're the signals we get. But for the majority, most stock alerts don't end up being triggered by the end of the week. So Friday is a very important day for me. So, but remember, what we can't control what the market is going to do, but we can control how we're going to behave. And for the most part, that is managing risk. Remember, when I get into a trade, it's the analysis that gets me in. But once I'm in a trade, it really is risk management. I have to manage the trade to try and prevent any losses from occurring and make sure we maximise the potential of a trend. Often the sabre rattling, I think of President Trump, comes to naught. Tariffs in, tariffs out, GARS or whatever he's going to be doing, who knows? But it just keeps us all on our toes a little bit. But it's the unexpected events we can't control. Often people say, what do you do about black swan events? Well, you can't do anything about black swan events because you don't know they're going to happen. But we can prepare for them with our trading plan. Okay, when things happen, we don't necessarily know what's going to happen, but our trading plan is a very good thing because it manages our money and makes sure that we're the opportunities. If it's bad and hits our stop, then we get out. If not, if it's going higher, we run it, we raise our stops. So black swan events occur all the time. It's what drives markets. Unexpected events. Expected events don't move markets. So, but we need to be able to prepare for them, and that means have a controlling trade plan. Otherwise, you don't know what to do. You become confused and you become rattled, and that's not what you want when you're trading. You need to be cool, calm, collected, and know what to do. Markets are constantly at the mercy of events. Whatever happens, wars, all sorts of different things that happens in this world, tariffs, whatever it might be. So we're always responding to it. We're at the mercy of events, but we need to focus on our trade plan, not the events. It's not the events that we're going to have to worry about. It's our trade plan and what we should be doing in response to those events. Okay, so that's where we've got to sort of don't say, well, what's happened to the black swan? I don't really care. I know what my trade plan does. When the market moves, I react. I respond if I'm told. Okay, so we need to focus on our trade plan we need to focus on our trade plan, not the events that occur. So markets can be brutal and sometimes it's not nice, and it does happen, but we have to deal with it and get on. Okay, when things happen, because majority of the time you will get it right. Okay, but occasionally you won't. So dent to the ego, bad luck. Take your medicine and move on. And in having said that, markets can be brutal sometimes, but they can also be very nice. We've just been dealt a nice hand of profits, and we have to protect that. We've got some wonderful profits in there. You saw the open positions in my newsletter last week. All my open positions, all 45 of them, whatever there was, and all the profit ratios and things like that show you exactly how it's performing. So we've got to protect a lot of those profits, and that means using a trailing stop. So what do? We watch and we be patient and let it happen. Okay, and sometimes there is nothing to do. That's just the way it is. Okay. All right, so that's about all I've got for you today. I hope I've sort of shown you a few charts there, given you a few thoughts about doing things when things go a bit crazy. Sometimes it's just better to stay still and do nothing. So, as we know, patience is a virtue. So be virtuous. Okay. Watch your trends, heed your stops. Keep it simple, have fun, and most of all, stay safe. And I will see you all next week for a few more little bits, pearls of wisdom. Okay? Thanks very much. See you later.